Hello, today we're working in Intermediate Accounting, Chapter 7 on the Cash and Receivables chapter, and we're going to work a couple of problems that are bank reconciliations. Hello, my name is Jeff, and I help you finally learn financial literacy. So Chapter 7 talks about cash and receivables. So cash, a couple little terms real quickly. You could have restricted cash, so it's restricted for a special purpose, and you're kind of signaling to stockholders or readers of your financial statements, hey, this is for a particular purpose and we're not going to use it to pay dividends or whatever. There's also compensating balances. Sometimes with a loan covenant, we're required to maintain maybe $100,000 of cash to pay that off or to partially pay that off. So that would be a compensating balance. Now, the idea of cash and cash equivalents are any instrument that's 90 days or less that is very, very near cash. So the best examples are treasury bills, commercial paper, or money market funds. Those would go collectively into the cash account. So the official name for cash is cash and cash equivalents. All right, the bank reconciliation is what we have to do with our bank account because we write checks and there's a timing difference between when checks are written and when it clears the bank. Also, other events like deposits or fees or whatever. So let's do a couple of little quick examples of a bank reconciliation. The first example is, let's say the TriStar Company ends December 31st with a book balance of cash totaling $95,000. This is in our accounting records. This is our books. The bank statement as of December 31st shows a balance of $100,340, and there's several reconciling items. There's deposits in transit. Deposits in transit are deposits that we have made that hasn't cleared the bank yet. Usually that takes a day. Sometimes it could take several days. So we make a deposit, and then it shows up in the bank sometime later. The NSF deposit is NSF check. Is non-sufficient funds from J. Smith, and this means the customer wrote a check that did not clear that bank, and so their $800 is not in our bank account, so we need to take that out. Outstanding checks we have written that have not cleared the bank yet are outstanding checks. That's $15,000. The bank fee is $40, and there's one error, and we'll get to that in a minute. There's a transposition error. The actual check was written for $790, but we, as the bookkeepers, recorded it as $970, so that's transposed the 79 and the 97. So that's the TriStar Company's error. So here's what I would do. I would just set up, now I've just pre-selected, pre-formatted the bank reconciliation. So we have a bank column and we have a books column. So here's what I want to do for the banks column. I'm going to go ahead and do a sum of all the numbers. So it's going to be easy to tell, are we in balance? Have we adjusted our cash balance? So here's the challenge. The company on their books, the book balance is $95,000. So how much do we have? Do we have $95,000? We'll see. The bank says you have $100,340. So we have a difference of about $5,000, $4,000 plus. So let's put in what we know. Deposits in transit are $9,000. Now, does that go on the bank side or the book side? Who knows about it and who doesn't? We, as the company, TriStar, have made a deposit of $9,000, so it's already included in our books. It's not on the bank statement, so we're going to add $9,000 deposits in transit. Now, the next one is a NSF check. It bounced $800. The bank is letting us know that the check bounced. We do not have that $800 anymore, so they took it out of our bank account. So the $800 comes out of the book side. Outstanding checks are checks that we have written and they have not cleared the bank yet. We've sent the checks to the people we're paying and it has not cleared the bank yet. So therefore, Outstanding checks, the book already is included in the outstanding checks are included in the books. And the bank, we need to adjust the bank column. So minus 15,000 is outstanding checks. The bank fee, the bank charges the fee, so the bank knows about it. So subtract $40 from the books. And the error, we need to figure out the error here. The check was written for $790, so we should have taken out $790 from our bank account. We took out from our books side, right? So we have taken out $970, so we need to add back the difference. So I'm just going to do the math. $970 minus $790, and we have $180. Now, if we've done this correctly, we should have it to balance. The adjusted cash balance is $94,340 for both the bank and the book. So how much do we have? We really have $94,340 after everything clears the bank, and now we've updated our books. It's $94,340 is our adjusted cash balance. Now, we need to make a journal entry. We need to make a journal entry to make this happen. So we need to make an entry that reduces our cash for these items, and it's $660. So we're going to set up, I'm going to credit cash for $660 because cash goes down. And what else do we need? We need a non-sufficient funds check. It was written by J. Smith. So we're going to set up an accounts receivable for J. Smith in the amount of $800. The $40 fee, we'll call that a miscellaneous expense. So we paid out $840. We've reduced our balance by $840. We have one for $180, and it was a check written for $790. We don't know what this original check was written for, but we can assume maybe it was for accounts payable, and so we need a credit. So let's credit accounts payable for the $180. We sent it $970 to accounts payable rather than $790, so we need to increase that accounts payable again. All right, the next problem, example 2, very similar problem, just change some numbers here. So let's assume that we have Tenco has a cash balance at the end of December of $49,000. The bank statement on December 31st shows a balance of $58,735. We have deposits in transit, an NSF check, outstanding checks, a bank fee, and we have a different error. We'll come to that here in just a minute. What is our book balance? Our book balance is $49,000. Now, one thing we want to do, let's go ahead and do a sum of this entire column so we can see how close we're getting. Our bank balance is $58,735. Our deposits in transit, we have made deposits. They have not cleared the bank in the amount of $14,400. That will be a positive increase in the bank balance. The NSF check, we received a check from N. Jonas, and we're going to subtract out $1,400. That check did not clear. The outstanding checks we have written, they have not cleared the bank. It will be a negative, a decrease, because we've written checks that reduces our cash balance. The bank fee is $65, so subtract out $65. And the error, the check was written for $1,250, but cleared the bank at $2,150. Now you have to ask a question. Who made the mistake? Was it the bank or Tenco, the company, on their books? Well, it looks like the bank has made a mistake. It cleared the bank at $2,150, and it only should have cleared the bank at $1,250. So we need to make an adjustment. And the bank, you would call the bank and say you need to add back, looks like $900. $21.50 minus $12.50. They need to add back $900 to make it correct. They took out $900 too much with an error, and so therefore our adjusted cash balance is $47,735. Now let's make adjusting entries here. We need to make just 2 entries. For our adjusting entries, we need to make cash go down by $14.65, looks like. So we're going to credit cash in the amount of $14.65. Now what are our 2 debits? We have a non-sufficient funds check, so accounts receivable for N. Jonas. He owes us $1,400. And we have a bank fee. We're going to call it a miscellaneous expense, and that's for $65. All right, so this is how you get started with bank reconciliation. Sometimes the format in textbooks is a little different on the bank reconciliation. All you need, it's an internal document, all you need is a column for bank and books. Make it as simple as possible. You don't have to come out with a statement that looks like it's a formal little statement that has a official title or anything like that. It just needs to be a bank reconciliation to reconcile the bank and the books. All right, thanks for watching.